I'm afraid I didn't brought much sunshine substantively either with me here today. What I'm going to talk about, which is the European economy, where I think it stands right now, and where I think it's heading. Of course, in the broader context of political revolts like Brexit, the election of Donald Trump in the United States, and of course, other revolts that we have seen across Europe, which may not have manifested themselves, at least not so far, in elections of new governments or new political leaders that are clearly outside the central space of what we previously might have called accepted politics. I'm going to give you a couple of observations, perhaps theses about where we stand and where we're going. Some of them may be more sort of statements of facts rather than speculations about the futures, but others are certainly going to err on the side of, trying to figure out where politics will be taking us in future in this part of the world, and how the performance of the economy and how the economy works will influence that. The politics of it, I think, is pretty clear, and I think it's fair to say that for the past 10 years, the way that politics and political institutions behave, including central banks, of course, have been the dominating factors of economic performance in the entire Western world, and of course even beyond that. At least for me, I was brought up in my thinking about the economy and thinking about the politics in sort of trying to envisage an economy where politics and the behavior of political institutions shouldn't be a decisive factor for what happened. The role of central banks were to be insignificant, to guide and perhaps steer the economy in a very subtle, almost disguised way, without moving markets, without moving the direction of entire economies. Similarly, politics, of course, has always played a role in shaping regulations and shaping taxes, the welfare state, and other things, and in that sense always had an influence on the way the economy worked. But at the same time, for a couple of decades, we had a consensus where many political parties and many different political thinkers conformed to an idea about the economy which was going to be less guided by at least discretionary or flexible political decision-making. It was more focused on the importance of institutions, the importance of rules, and not so much guiding or managing the economy in that old type of stop-go fashion that we were used to in this part of the world in the 1960s and the 1970s, to some extent in the 1980s. But politics have returned, and returned visibly, to the entire performance of the economy, and we have been living through almost 10 years now since the eruption of the crisis in the autumn of 2007, with the Lehman crisis coming in 2008, where the actions of governments, the way they have shaped decisions about fiscal deficits, the way central banks have decided how much money that is going to be injected into the economy, have largely been the major forces of our economic direction. The title, speaking about the economy in the age of Brexit and Trump, of course, suggests that not just that there has been a long-term change, but that in the course of the past year, from June 23rd last year, when Britain voted to leave the EU, until today, that there are even stronger forces at play that's going to change the economy even more. And perhaps not only change the European economy, but to change the European project the European Union, the idea that has guided much of the thinking about the EU's future over the past decades. I think this is the case, but I, at the same time, would like to caution the idea that Brexit and Trump have changed much of the direction of the EU. The problem, I think, that has been facing EU for quite some time is a problem of legitimacy, connecting to what Lena said initially about how do you merge the notion of not just the global economy, but globalized identities, global perception about common problems with the actual institutions, the political institutions that have been established in order to respond to them. If there are reasons to believe that these institutions are not legitimate, that they act in ways that in one way or the other may be different from what people want, there will be a problem of legitimacy. And I think that problem has been at the center of European Union problems for quite some time now, leading to what is the second problem, a lack of authority. And lack of authority doesn't mean an absence of authoritarianism. It means that we don't have political decision makers, neither in Brussels nor in key political capitals in Europe, that are confident about sharing sovereignty, making decisions at that political level in a way that is going to be not just effective, but also be seen as good choices or something that will be rewarded politically by their national constituencies. And that has led us to a third problem, which is the growing perception across Europe that the EU today isn't capable of responding to what is perceived to be the main problems facing individual European countries as well as European Union at large. That may include migration issues. It may include, for some, Russia. It may include, for others, the shape of the global economy and the extent to which that European countries benefit from it in the future. So that's what I'm going to talk about, and that's where I'm going to end up in my presentation here. But before I'm going to end up there, I want to give you a couple of observations, theses about where I think we stand and where I think we are going economically. Now, let's see if I can find the right... Yes. So let's start with something which is pretty obvious. On economic growth, which in the European Union is not just poor at an averaged EU level, it's poor in most individual EU countries as well. There are very few exceptions to the rule. For the past 20 years, we've at least been living with a pretty diverse landscape of economic growth figures in Europe, where at least some countries, some in Eastern and Central Europe, some in countries like Ireland or perhaps previously in Spain, were growing at high levels at the same time as other countries were growing at low levels. But now we have a situation for economic growth in Europe which is poor for virtually everyone. You're now sitting in a country which were at least the exception to the rule for the past 2 years, where growth has been at extraordinarily high levels, driven by a couple of exceptional factors, but the growth performance even here is now conforming to the European average. We're talking about an EU growth in 2017, which is forecast to be around 1.6 to 1.7%. When we look to future projections, which of course are always difficult, but those expectations we have of the future suggest that economic growth will not move any significantly from those levels. For some countries it may go up a bit, perhaps hitting 2% economic growth for 2018 or 2019, then going down a little bit 2021 and 22. For other countries, it's far more stable. Country like France, for instance, is forecasted to grow at an average level of 1.7% from 2017 to 2022. So economic growth and the outlook for economic growth is poor. And that, of course, is something which is of high relevance, not just because we are in a situation where many EU countries are still facing remaining problems from the crises and structural problems that existed before the crises, and they include everything from high unemployment for special groups, not least migrants. That there are a couple of other sort of problems that tend to grow, they tend to magnify at times when economic growth is low. When the economy is growing at high rates, most problems tend to become smaller because you have access to at least fiscal resources in order to deal with some of them, or perhaps to hide some of them. You have an economy which employs more and makes it easier for people that also been distant from the labor market for a longer time to basically get back into it. But in times of sustained low growth levels, most problems tend to magnify. If there can be economic problems and there can be non-economic problems, but they tend to magnify. The outlook for the future actually gets bleaker when we begin to look at underlying factors of economic growth and long-term prosperity generation in the economy. The growth of productivity in the European economy is actually poorer than economic growth. We're talking about a situation right now where the EU, at an average, has virtually had its productivity growing at zero levels for a number of years. There is no productivity growth in the economy. You can measure it in different ways. You can have a discussion about whether the growth of the digital economy has made it even more difficult to measure actual economic output and productivity. But these type of cautions tend to become less relevant when you put things in a longer term perspective, that we have actually had several years of zero economic growth, and there are few indications that suggest that growth would actually be larger than that. Partly because we have problems with businesses investing in the economy. Business investments have declined, or business investment growth has declined gradually over a pretty long time now. We can perhaps say that some of that decline is related to businesses not being confident about market demand in future, so they are hesitant about investing. They don't know if they're going to be consumers there in order to buy the products that they're going to produce with all the investments that they're going to do. But there are also other factors at play here, which are far more structural and doesn't really connect to the business cycle or how businesses perceive the business cycle to evolve over the future. We have a long-term trend of declining productivity growth in European economy. Europe had, for almost 15 years, a period when we were catching up on the productivity frontier in the world, when the EU, if you treat EU as an economy, were converging to the frontier in terms of those economies that produce with highest productivity. And the United States has traditionally been the economy with the highest productivity level and also with the highest productivity growth for a sustained period of time. But that catch-up process ended, and it ended a pretty long time ago. Ever since then, and if we draw out these trends over a longer period of time, we can see that from the early 1970s until today, for Europe as a whole, we've basically shaved off 1 percentage point of productivity growth for each decade. So if we started in 1970, coming out of that post-war recovery, sort of golden economic miracle period in the 50s and the 60s, from the 1970s we went into that decade with productivity growth at levels of around 4 percentage points annualized for a decade. In the 1980s, we went down to 3%, in the 1990s to 2%, in the noughties to 1%, and now we're basically down to 0. So we shaved off roughly 1 percentage point of productivity growth per decade in this part of the world. United States it's not very much different, even if the productivity cycle has been somewhat different there than in Europe. But it's basically seen the same type of decade by decade long-term trend of its productivity growth. So that is not a positive message if you want to understand where the economy is about to take us, in the sense that the underlying in the economy isn't very strong. The underlying strength of the economy in terms of generating more productivity growth in both services and manufacturing sectors are not telling us that we should expect our economic growth or the pace of prosperity generation to move up much more in the next couple of decades. If we look to another factor which has been very important for driving economic growth in Europe, and that's been trade, and you can call it the economics of specialization or the economics of Adam Smith. Unlike many other parts of the world, especially large economies like the United States, trade has for a very long time been extraordinarily important for determining the pace of economic growth and the prospects that we have for future economic growth. Europe has been an economy driven by specialization, increasing specialization in that ancient formula delivered by Adam Smith in 1776. Other economies have been powered by, of course, also trade, but also many other factors. United States can sometimes be described as an economy following the economics of Joseph Schumpeter more than Adam Smith, in the sense that it's an economy which have had more creative destruction, in the sense that innovation, entrepreneurship, firm creation and firm exits have been more important for the typology of growth in that country. It's been more sort of a wild west type of economy where innovators or new companies have been created, contesting markets, competing out existing incumbents, and as a consequence generating more economic growth. Europe has had, of course, an element of that sort of growth as well, but the European economy has also been more traditional in the sense that incumbents have remained in place and that they have adapted, adjusted, responded to changes in technology, changes in innovation by not going out of business, but by changing the product portfolio and becoming companies that are different from the ones they were when they were created. But trade no longer powers economic growth to the extent it did over the past 50 years. The World Trade Organization recently reported that trade growth in the world in 2016 was 1.3%, which is roughly 1/3 of the average world trade growth for the past 40 years. Traditionally, we had a formula which was that trade growth in the world was going to be at least twice the size of economic growth. In good years, it was going to be 3 times the size of economic growth. But now, trade growth is about 1/3 of what global economic growth was in 2016. There may be a slight increase in 2017, 2018, at least if you listen to the World Bank or the World Trade Organization. But a good part of the forecasted increase in the values of global trade is linked to an increase in commodity prices. That commodity prices are going to pick up again, and as a consequence, the value of global trade is going to be a bit higher. If we look to Europe, we can see a similar pattern there, where trade growth internally within Europe, it hasn't stopped growing, but it's growing at an extraordinarily low level, which can be explained, of course, by natural factors, that we've had low economic growth in Europe, that we've had big structural changes in many economies, not just Greece, but in economies like Italy, Spain, France, and others, where declining demand has basically led to a drop in internal trade in Europe. But we're basically looking at the same type of picture here, where we're not finding anyone who is expecting internal trade in Europe to break out from the trend over the past 3-4 years, and that it's going to return to the sort of very high levels of internal trade growth that we had in the EU up to 2008, 2009, and that we also saw during the recovery in 2011. So trade is not really shaping the economy to the extent it did in the past in Europe. So these are, in my view, two important forces in order to understand whether we think about the direction of the European economy as sort of going in a very positive direction, or if we think that we are roughly going to have, over the next couple of years, at least perhaps for a longer period of time, which I'm going to come into next, but at least for the next couple of years, whether we're going to basically grow and have a direction of our economic performance which is pretty much similar to what we've had over the past years. Now, there is an expectation out there that the European economy, like any other economy in the world, is about to radically change direction because of a lot of changes in technology. You've all followed the big debates around robotics, automation, digitalization, artificial intelligence, and what those new technologies will do in terms of generating new innovation and generating a completely different direction for the economy as well. I'm very skeptical about that proposition. I'm very skeptical about the notion that we are on the threshold of an amazing period of rapid technological change in the economy, which is going to have huge impact, not just on jobs, but on how the economy performs in a more general sense. I think there are a lot of amazing technologies out there which are promising and hopefully will have an impact on economic performance. I think, however, that we should rather worry about having an innovation famine rather than an innovation feast over the next couple of decades. Innovation isn't really just about technology and what technology can do to us, the properties of technology. Innovation is a far broader concept, and it includes the way governments, markets, firms, and individuals are going to respond to technology. Whether we have constructs of markets and firms, and whether we have people, not just guiding governments and markets, but people in a broad sense that are predisposed to have an acceptable, if not embracive, view of new technology, whether they are willing to change as a consequence of new technology. My thesis, and I've just released a book about this called The Innovation Illusion. I don't have a copy here to show you, but in the event that one of you would be interested to learn more about my thinking, I suggest you read that book, but my thesis is basically that we have an economy which is programmed for a slowdown, which is programmed for being less adaptive to what new technologies actually can do. So my worry is not that we have an absence or a shortage of new technologies that could do a lot of good things for the economy, increasing its productivity, increasing the pace of change in the economy. My thesis is rather that our institutions, our firms, and our people don't like the idea anymore of rapid change in the economy and will act to slow it down. We have markets in Europe, as well as in the United States, which has become less dynamic. We have lower creation of new firms, and we have fewer companies going out of business today than we've had in previous decades. When we look at churn rates of jobs, how many new jobs are being created, or how many new jobs are being destructed every month, every year, we see that those rates are going down. There are fewer jobs being destructed over the past 5 years than there were in the beginning of the 2000s, or in the middle of the 1990s, or in the late 1980s. We see much less firm dynamism in a general sense in companies or markets increasingly being dominated by large firms with a lot of incumbency advantages, and they use those advantages in order to slow down competition and reduce the opportunities for new entrepreneurs with new technologies to contest markets. We see that regulations are becoming far more restrictive to new entrepreneurs that want to contest markets with new technologies, especially if those new technologies are a bit unknown. If we talk about technologies that haven't been thoroughly regulated in the past. And of course, we're seeing generally an age typology of our markets, which is heavily moving in the direction of the silver or the gray-haired people. In a sense, let's see. So we're seeing a shift in market behavior, a shift in consumer demand, and a shift in other ways which is highly connected to changes in demography. And those changes in demography are stronger in Europe than they are in America. There are other parts of the world which are also seeing big changes in demography and how that influences economic performance, countries like Japan, countries like China. But demography here comes in my view, in two different ways. The first is what I'm calling here the silver takeover of capitalism. My view is that capitalism has changed profoundly over the past 40 years, in the sense that the main character of capitalism has virtually become extinct, and that's the capitalist. What we have right now is, broadly speaking, a capitalism which is dominated by institutions managing other people's money. We have, for the past 50 years, seen an enormously rapid increase in the role that financial institutions play for the ownership of individual firms, and play for the ownership, in that sense, of capitalism. And a very large part of the money being managed by these financial institutions is, of course, related to people that are saving for the retirement. And if you know the life cycle investment hypothesis from your time at university, you will know that, or if you know your own investment behavior, you will know that the closer you're getting to retirement, the less willing you are to take risks, the less willing you are to invest in highly entrepreneurial enterprises. What you tend to prefer the closer you get to retirement, and when you are in retirement, is a stable and predictable return. That's what you want on your money. And given the extraordinarily important role that these institutions are playing for the ownership of large enterprises and even medium-sized enterprises, we have now moved into a type of economy which you can rather call a rentier form of capitalism. It's a capitalism where we don't have capitalists, but we have rentier owners who want to have a couple of percentages every year, and they want that to be predictable. And if you want to have predictable returns, you need to invest predictably. You need to invest in enterprises that can deliver that form of predictable return. So we get into the economy, the type of economy which increasingly has evolved over the past couple of decades. For Europe and for other parts of the world, it means an economy where companies are far less willing to invest in projects with long time cycles. They try to shorten the time cycles of every investment to make returns on them far more predictable. They invest a smaller share of their revenues in research and development. They invest a smaller share of their revenues in physical capital. So when you measure investment as share of revenues, you've actually seen a decline over a longer period of time. And that's very much a response to the type of owners that these firms have. These are owners that don't want companies to take much of a risk. So this silver takeover of capitalism itself, I think, is to a large part one of the factors which helps to explain why we've seen this gradual slowdown of productivity, of economic growth, and also why I think that we shouldn't expect growth or the underlying strength of the economy to change profoundly over the next couple of decades, because the expectations based on demography are telling us that it's in fact will get worse, that a larger part of not just savings, but a larger part of our economy, or a larger part of our societies will be silver-haired. And these will be people that have less inclination to invest and live with innovative enterprises that may deliver extraordinary good returns in the future, or that may go bankrupt the next day. Next thesis on demography, which is the silver takeover of politics. That demography is not just changing the economy, but it's also changing our politics. And now, of course, it's changing our politics in a very simple way, that we have very large cohorts in national electorates that are now in retirement or getting close to retirement. They are above 65. When we look at the voting patterns in the US presidential elections, when we look at the sociology of the Brexit referendum in the UK, when we look at what we think happened in France just 2 days ago in the election there, we can see that older people tend to have preferences for political choices which are more expressive authoritarian type of values. So they like a certain type of nationalism which is exclusive, which tends to put a political premium on what makes us different rather than what makes us similar, on issues, of course, of migrants and immigrants, on issues about crime and punishment. We're seeing politics in Europe which is increasingly sort of occupied with both issues of redistribution, the sense that many people in that age cohort, even if they are asset strong and have far better economic conditions than younger people, they tend to be fearful of whether they're going to get a pension in the future or whether there's going to be money to pay for elderly care, for hospital care. And they vote increasingly in order to either get or to maintain different redistributive advantages that these generations have had. So we have the politics of redistribution there, but we also have the politics of retribution, that we are now looking at type of voters with significant capacities to change the outcome of elections, which tend to have views on politics which we can classify as being close to the idea of retribution. That not just there has to be a price to pay for national elites that they think have misbehaved, that either in other institutions and other forms of government representatives are lacking in authority and should be punished for it. So this silver takeover of politics, I think, leads us even more in a direction where our economies are going to become less open and less sort of embracive of big change. We're probably looking towards a politics where classic economic regulations, classic regulations of science, of technology, will become more restrictive in future. If you go to a country like Germany, for instance, and just talk to elderly people about what do you think about GMOs, or what do you think about pesticides, the use of them in food farming, etc., and you're going to find views and perceptions that are highly anti-scientific. You're going to find views that are far more positive towards regulations that wants to restrict technologies, chemicals, or other forms of scientific creations in order to produce food or produce anything else. And that these perceptions are generally going into areas where they didn't exist before, like pharmaceuticals, like medicine, or how they think that a properly run health service, what they should offer in terms of access to non-scientific medical treatments. So this silver takeover of politics, I think, is going to lead us even more in the direction where we as an economy will have increasing difficulties to power economic performance by the help of new technology and new innovations. I'm not saying that the example of Brexit or Trump is going to guide or is going to tell us what the outcomes of other elections are going to be. Nor do I think that the Brexit referendum or the election of Trump will have that much of an impact on the European Union in the future. And I say this because much as I want to chair people like Mark Rutte and Emmanuel Macron, the Dutch Prime Minister who was re-elected recently, and the French presidential candidate Emmanuel Macron, who came out first in the first French presidential round, much as I like to share their positive view about European cooperation and empowering the EU with more authority, I think that the era of an ever closer union has ended. And an ever closer union goes back to a particular phrase in the Rome Treaty celebrating 60 years this year, which of course guided a lot of federalist or semi-federalist thinking about where the European Union should go in future. The notion about an ever closer union has been very, very strong, and it's certainly guided myself in my own thinking about the EU and I think it should go. But I think it has ended. But it didn't end with Brexit, nor did it end with Trump's initial skepticism about the EU, or that he wanted to see many other countries to follow the UK out of the exit door. I think it ended far earlier than that, and I think we saw a manifestation of it almost 15 years ago when both France and the Netherlands voted against the constitutional treaty and basically gave an early warning about declining electoral support for anything that suggested a deeper form of federalism. I think the EU has now moved into a type of political culture that I would call, purely transactional, where we see much less of the type of visionary generosity that guided a lot of the thinking about European Union's future over several decades, from 1958 up to at least the late 1990s, that guided not just sort of the expansion of the EU to East and Central European countries, but that guided much of the more thinking around functional policies, that countries, and not just Germany, could accept the proposition that we may not be the direct beneficiary of a policy right now, but we think that the changes that will happen and the way they will evolve over a longer period of time also is going to be positive for us, even if we are not going to find that a cost-benefit analysis for the short term is going to deliver what we like. But we don't see that type of visionary generosity anymore. We don't see people that are willing to invest political capital in an idea in order to generate benefits for the long-term future, but benefits that may not be here, or indeed costs that may be here right now. This doesn't mean that the idea of EU has died. It just means that it has become very different. And that whole transactional political culture lead to, in my view, sort of a type of political conflict which is probably going to generate sort of even more tensions in the future than those that we have seen over the past 10 years around sort of the Eurozone crises, fiscal rules on migration policies, or any other type of policies which have generated a lot of tensions in the past 10 years. The whole notion of the transactional political culture doesn't really fit with the idea that you can sustain long-term international corporations by sort of international institutions that have sort of an idea about the future projected into themselves, which was, of course, the idea of the ever closer union. The idea of Europe was that it wouldn't stop in 1957, 1958 with the Rome Treaty. It would continue, it would go on. The same thing with the treaties that were negotiated at a later point. The same thing with the creation of the single market. It was supposed to be a start, not to be a finish of something. But I don't think we're seeing as much of that anymore. And I think the type of political culture that will come is far more transactional and less capable of agreeing on long-term political solutions which have distributive consequences right now. Likewise, the economic growth premium of European integration has also weakened. This has been a core selling point, of course, for a long time now, that it's almost as if there has been an underlying promise that if you join the EU, you're going to be better off. Your economy, your prosperity will become better. If you participate in a process of deeper integration, your economy is going to become better off. You will generate more prosperity and better material outcome for your citizens. So that's been sort of the growth premium, and it's been extraordinarily important. And it's been extraordinarily important in countries like the UK, of course, which have always had more of a transactional idea about European cooperation. It's been important in countries like Sweden, which never really sort of have bought the idea of an ever closer union, especially if it's slanted in highly federalist terms. It's guided many other countries as well. But we can see that this growth premium has weakened, and it's weakened over a long period of time, where the creation of the single market in the early 1990s clearly led to positive economic outcomes, both on economic growth and a lot of intermediary type of aggregates like productivity, investment, etc. But that growth effect it slowed down after many of the big changes have happened. Then we had the idea that, well, we started with the single market in 1990s for goods and merchandises. Now we're going to step into services and do something there. But that never really happened. And now the idea for some time has been that we're going to create a digital single market, and that we on the back of broad digitalization in the economy will reduce different barriers to economic exchange in Europe, which certainly is going to deliver that premium to countries, that if you participate in creating this digital single market, you're sure to be better off than if you're not participating in it. But it's the same thing there, that that notion of the digital single market has always become an illusion in itself, that people almost believe that the more you talk about it, the more real it's going to become. But we are not seeing much at all in terms of reducing barriers to the digital economy in the European Union right now. When you look at most of the initiatives that are being taken and that come with the word digital in their title, they are introducing more barriers between countries than they are reducing them. Add to that the era of globalization as we knew it in the past has ended. And I don't mean that trade is going to stop, or that we're going to spend less on foreign travels, that there are going to be fewer tourists in the world, or that necessarily movement of capital will become vastly different in the future than it's been in the past. What I mean by the era of globalization is that the idea that we could grow the economy on the back of a high pace of growth of capital, labor, and trade, that was going to deliver high economic growth across the world. We don't have a new China on the doorstep to the world economy. The amazing thing about the past 25, 30 years is that we've integrated roughly 2.5 billion people into the world economy for real. This was the concept of the global factory. This was the consequence of a fascinating period of 30, 40 years of increasing fragmentation of supply and value chains in a lot of corporations. That the iPhone you mentioned, Lena, that you took the iPhone, you assembled around 400 different products into one phone, and all these components have crossed around 500 borders before the components were assembled to a phone. That, of course, is going to continue. We're going to continue with a lot of input trade, and we're going to have increasing trade also for services. But we're not talking about an era anymore where we have a vast number of new people stepping into the world economy for real, in the same sense that we had in the past 30 years. We're probably not talking about a growth of capital in the world which is going to be as high as it were in the past 30, 40 years, for the simple reason that sources of capital generation has become so much weaker. And as a consequence of that, trade and trade growth is also going to be less important for the shape of our economy in the future. So the era of globalization has ended. With the era of globalization was, of course, another thing, and it was the concept of the global village, or at least the idea that it was possible to create global institutions, or at least international institutions, to respond to problems that are common to everyone. That we would eventually find ways to govern these institutions that were far more democratic, that responded to the same democratic ideals that have governed national institutions for several hundred years. And this is where I'm going to end on what I think is a positive note. It is, of course, true that the revolt that we have been seeing politically over the past years, that it is, to an extent, a revolt against the idea of that global village, and a revolt against the global elites, or a revolt against multinational companies, global capitalism, or whatever shape and form that will come. But I think, to a large extent, when you drill down sort of the sociological analysis that you can find about not just the election of Trump or the Brexit referendum, but also when you look at the sort of voter sociology, public perceptions in other countries, you will find that the revolt is equally, at least, perhaps even more, a reaction against declining authority and legitimacy of the nation states. That we are far more rebellious against what we believe to be nation-state institutions that don't behave in the same fashion as they did before. So if you take a country like this one, like Sweden, which of course may be different from many others in the sense that it's a small, open economy, always been dependent on trade and dependent on connections with the outside world, but an economy, but also a country which have seen a remarkable change in its politics over a very short period of time, just in a few years, where the revolt that we have been seeing in electorates haven't been so much against sort of the WTO or America or Brussels. It's much more about the declining authority and legitimacy of nation states institutions, like the police, like the army, like the idea of what is really Swedish culture. And beyond that, revolt, of course, is very much against those institutions that people previously thought was channeling political perceptions connected to legitimate and effective nation-state institutions. It's a revolt against political parties that have been in power over the past couple of decades, those that people thought were there in order to manage their wishes and desires in a good way. So we're seeing across Europe almost an electoral slaughter of traditional old Labour parties, social democratic parties, partly because they have been in power for many, many decades, for a long time in many countries, and also intimately linked to nation states and nation states institutions, and they see a weakening of those institutions and react to it. I think it's a matter of time before establishment centre-right parties will see the same thing in many countries, not just in France now, or in other countries where traditional centre-right has become virtually extinct, like Denmark, indeed even the Netherlands. And in a sense, and why I may end this on a positive note, I think sort of there is a very strong understanding in many parts of Europe that the EU or any type of other international institutions, that as long as they respond to real problems, they are highly wanted and highly legitimate, whatever other problems that may be associated with them. That sort of the revolt against the elite or the revolt against Brussels may be much more a disguise in the sense that they're revolting far more against national politics and national political institutions, that whatever happens in future will probably not regain much of that effective influence they have in channeling the perceptions of people in the past. That much as older people are now voting for Donald Trump and perhaps voting to leave the European Union in Britain and perhaps creates an old vision of the empire again, we're still talking about, to a large extent, a Led Zeppelin type of generation that went through a revolution in religion, sexual habits, alcohol, drugs, culture, the economy, and that is not alien to the idea that changes in nation states and changes in the world that you largely like will also affect the power and effectiveness of your own nation states institutions, and that you need over the long term to find international ways of solving problems. And if one of these options will be the EU, then it may not be a very bad idea, even for those people that electorally, in the past year at least, have signaled something completely different. All right, that's where I'm going to end, hopefully on a positive note.